Good morning, everyone. Welcome to this live intraday strategy webinar. Today is Wednesday, August 3rd. Michael Boutros here with you this morning. Pooja, great to see you. Eileen, Adam, Gaurav, Jacob, Joel. Good to see everyone here in the room. So a quick question here from Pooja saying, hey, Mike, nice run on sterling dollar. I'm flying today, right on. Can we take a look at cable and Aussie Kiwi first? Sure can, Pooja. Let me just get through this real quick. We did get the release of ADP. I just wanted to follow this really quick this morning. It came in at 179,000 with a slight upward revision. So it certainly paints a rosy picture for Friday's more encompassing non-farm payroll. Non-farm payroll as it stands right now is expected to come in about 180,000 for the month of July. Remember, we got that blowout figure last month at 287,000. Unemployment widely expected to downtick to 4.8% from 4.9%. As always, the labor force participation rate will be of great interest as we see that oftentimes puts some artificial pressure on the unemployment rate. We'll go over these again tomorrow morning ahead of non-farm payrolls, but ahead of that, we do have the BOE interest rate decision on tap tomorrow. So Pooja will go over sterling in just a moment. I just want to touch base real quick on what's going on with the dollar index. You know, we've been following this setup. If you go to the intraday page, it's still the highlighted radar chart there. So we've now made it through the 38.2. We hit that 100-day moving average yesterday. We were talking about that in the webinar. Moving average, which has offered some really nice pivots in price, and we were talking about that possibility. We ran right through it. Okay, next downside target is right here at this confluence support. It also happens to be the 618 retracement of that same range from the Brexit low. So keep that in mind. That's 11,850 as far as major support for the downside is concerned. As far as a rebound, you could see a little bit more upside here heading into the U.S. session. Here's what the 30-minute looks like. And basic channel resistance off the highs there from last week, from late last week. On the 27th, you can see we've been holding that rather well. The weekly open, the monthly open, both come in at 11,944. Just ahead of that, you have that swing low from last week, which was the weekly low, coincides dead on with channel resistance. So long story short, guys, this region here between 11,930, 11,944 is going to be our near-term bearish invalidation level and resistance. Okay, so a rally into this region might offer some nice short opportunities. Again, looking for an inevitable move into 11,850, that 618. Obviously, as we head into the latter part of tomorrow's session, ahead of the NFP print, you're likely to see markets start to flatten out, participation starts to dwindle, and could, again, those thin market conditions can offer some really radical price action. So keep that in mind. But as it stands right now, still looking lower in the index while below the weekly and monthly opens. Any questions on the dollar index before we move off? It's a quick recap on that. Again, just giving us a nice picture of base dollar movements moving forward. Okay. If there are no other questions on the dollar index, we will move right off to the British pound. Certainly one of our favorite plays this week has continued to offer some really nice moves. I'm glad you caught this, Pooja. It still looks pretty good to me. It looks vulnerable near term. Here's what we looked like last night on the update. Okay, and we were coming right into this near-term resistance, which is basically a median line formation we've been following off of last week's low. You had a really nice hold at support. We highlighted that earlier in the week. Here's what the daily chart looks like. You got a breakout above last month's open, and certainly we're still within the confines of this consolidation range, so I don't want to get too excited just yet about taking a much sterner, longer-term approach on this sterling. That being said, focus still remains higher. Immediately from where we are right now, Pooja, I do think you risk a little bit of a setback here. Keep in mind, tomorrow is the BOE interest rate decision. Here's what the overnight swaps look like as it stands now. So world interest rate probabilities for the UK currently stand at about 99.7%. And what that means, guys, is that the market has priced in this interest rate cut. If they do cut, My personal expectation is that you look to fade the sell-off, okay? So you look for this thing to drop into structural support. We saw that exact play with the Aussie dollar on the interest rate decision earlier this week. We'll go over that later in the session, but it's the same game plan. It's a constructive play. Markets are largely expecting the interest rate cut, and if they do cut, you want to look to fade weakness into structural support. That being said, if they don't cut, this thing is likely to rip face. And, you know, if we do see a topside break above 33.80, those subsequent targets that we highlighted last night are going to be right in play. Okay, that's basically 133.80 and then 134.80 as well. It's a 100 pip range. There's really nothing in between here to stop this. And then you got the 629 high just higher at 135.34. Near-term bullish invalidation, what would shift my attention from the long side? Very similar, would be a break below not only structural support here, but the monthly and weekly opens. Okay, I'm just going to extrapolate this to the right here. You're basically looking at this level right here, 132.35 or so. A break below that would certainly suggest you have a little bit more downside to go, and you'd be looking for a drop into 131.66. Not our preferred play, but certainly if you take a longer approach at this, this is just a basic trendline support off the lows, guys. Nothing special. Okay, and this is the broader invalidation. So a break below that, and you're likely to see a huge drop in the pound. Again, not our base case scenario if we do see this break, but certainly that's going to be our longer-term bullish invalidation. All right, so moving forward, heading into the U.S. session, looking for a setback here to get back on the long side, as close as I can to the lower parallels here. Keep your powder dry, again, as we head into the BOE interest rate decision with those expectations so high at this point. You know, I really don't think that you're necessarily going to see this thing completely fall apart if they cut rates. It's largely been priced in at this point. And even economist estimates, okay, look like we're calling for a 25 basis point cut. If we take a look at this, kind of get an idea. Yeah, okay. I'm not going to get into that at this point. All right. Any questions on the British pound? Pooja, does that make sense as far as the pound is concerned? Hey, Gaurav, great seeing the room, man. Adam, same to you. Pooja says yes. All right. So one other thing I wanted to note is that you haven't really put in divergence. I was looking at this morning to see if I can trigger actually a short into that near-term support, but you really didn't have divergence. Momentum did make a dramatically lower high, but the price action didn't make a higher high. And remember, when we're looking for divergence, we're looking for an extreme in price not to be reflected in the oscillator, not the other way around. So just keep that in mind. And as far as last night's update, all the levels remain the same and unchanged. We were looking for a near-term support right here and a rebound to take you into 33.80. Didn't quite reach 33.80 before starting to fizzle off here. So we'll be looking for the U.S. Open to give us a pullback, possibly to get back on the long side here for the pound. Pooja says, I'm going to hold through BOE with stops at 32.18. I like it. Like it a lot. Right on. Yeah, if you break the monthly open, the weekly open, you're likely to see a drop back into 31.66, to be quite honest. That also not only is 100% extension, which is not even important at this point since we broke that high, but objectively, Pooja, it's the weekly opening range low. In fact, let me just adjust this level here. There we go. All right. Good trade. What's the support region in case if the rates gets cut? So Gaurav, same thing, man. Remember what we did with the let me take a step back here. Remember what we did with the RBA guys earlier in the week? Here's what the update looked like. Oh, this was last week. We need the 731 update. Here we go. Okay, so here's what the Aussie looked like, right? And if you guys remember, I actually caught some heat on this because I was saying, look, either way, whether the central bank looks to cut or not, we'll be looking for a move higher to fade weakness. Okay. Monday, obviously, we broke support right below that near-term structure right here. The move lower, our bullish invalidation level was right around 74.90. Okay. They did cut rates, Gaurav. The market slammed into structural support, and then it just rallied, ripped through the highs. That's sort of the same game plan I'm looking for with the pound. Okay. The market is expecting the interest rate cut. Largely speaking, the dollar is still on the back foot, right? We just talked about the dollar index. So even if they cut rates, I'd be looking for support into the monthly open, into structural support right here. The only region that would make me want to short this thing would be a break below this. Gaurav, does that make sense? So the immediate risk is for a pull lower. I'd be looking for that pull lower to buy. He says an exclamation point. Yes, right on, Gaurav. Cheers, mate. It's pretty clean, guys. It's a pretty clean setup. You know, as far as the pound is concerned, you usually get a lot of these breakthroughs, throwovers, but broadly speaking, it's continued to respect this formation rather nicely. And again, one other thing to keep in mind is to the upside. Look where that trendline resistance comes in. Basic trendline resistance off the highs that you made on June 29th. I don't have that marked on the scalp chart because it's just beyond this upper median line parallel. If you highlight that, it's basically like 34.14, just above the handle. So keep that in mind there. Actually, if I copy it here, there you go, right there. All right. Again, guys, feel free to take a picture of the snapshot here by clicking on that camera button if you want to refer to these charts later on. I have a different fork on sterling dollar. Eileen, go ahead and send that over. 719 low, and not the spike high, but the 722 at 430. You talking about something like this, Eileen? Right. Not the spike. Something like that. So here's the thing. I was using a different pitchfork on this too. What you want to be looking for is as many inflection points off the slope as possible. And your best bet is always going to be, not the spike on the upper, is always going to be the slope that gives you as many touch points as possible. So if we use basic trendline resistance, forget the pitchfork altogether. If we were just take a basic trendline resistance off of the highs here, and then extrapolate that to the lows, you're going to see the same formation continues to form out. So I'm always going to use the most basic possible sort of trendline resistance. And it made all the inflections. Eileen, just do me a favor. Give me all three reference points. I'm having trouble fitting together. It puts the midline where I have the upper parallel. Yeah, you could be looking at something like this. 719 low next to 430. Well, our times are going to be different, right, because of our time zones. 722. So you are using this one. And 726. Eileen, I have like 4:30 a.m. on 719, like up here. Yeah, here's 4:30, 719. So I'm not sure why that reference point would be used per se. I don't want to spend too much time on this, Eileen, but either way, as long as we're working with the same slope and we're working with the same gradient, it's going to be something that we're going to want to pay attention to. So the long story short, and actually, I'm actually in favor of using this at this point. This actually looks pretty good, right? Similar slope, getting a nice tags here along the highs. It's same thing is being highlighted. Either way, same thing's being highlighted. So watch that slope confluence at 34.15 for the major breakout. And again, if we move above that, 34.80 is going to be the next move higher. Yeah, either way, Eileen says it's okay. My midline is your upper slope, and with these pitchforks, like I always say, the most thing the most important thing is the gradient, right? I don't want you to necessarily stress the reference points per se. Look to buy some weakness on pound. BOE is on tap tomorrow morning. Any questions ahead of the BOE? And again, at this point, with the markets at 99%, the risk is if they don't. Okay, markets are largely anticipating that they will cut. All right, moving right along to yesterday's update. After British pound, I did want to give you an update on Euro Cad, which was something that we touched upon the day before. Is continued to hold this slope pretty darn well. Here's what it looks like on the daily chart. I kind of reworked it a little bit. Here's what the Euro Cad looks like now. Oh man, I missed my entry this morning. Gosh, okay. In any event, the one thing I just wanted to highlight is this. You have a near-term slope that's been identified off the lows from, what is that, April, the high from May, and the subsequent low that we made last month. Okay, you can see the lower parallel holding the exact low that we made there on the 21st. If you take a parallel of this same slope and extend it off the highs that you made from the from the 11th of July, you can see that parallel converging on the highs that we made yesterday, the 200-day moving average, and the 50 line for this broader structure that we're in. Okay, that 50 line coincides just higher, around 47.40 or so. So Euro Cad, broader trade, I'm liking it for a move higher. Immediate near term, you're risking a little bit more of a drop against this region. And that's basically what we kind of highlighted here yesterday. Looking vulnerable just below the upper parallel here with a risk for a pullback. As we have a lot stacked up here, the 200-day moving average, the 50 lines, a sliding parallel for the current operative ascending slope, momentum turning ahead of 70, could get a little bit of kickback. Broader trade remains constructive above, guess what? Monthly open, weekly open, 100-day moving averages. So on these trades, you have so many nice convergences, and while some of the pairs have been kind of messy, specifically dollar CAD and Kiwi have sort of been all over the place. We'll go over those, but this is giving us a little bit more of a cleaner play here. Pooja says, thanks, Mike. I got to run. I will catch the archive later. Your webinar from Mumbai tomorrow. All the best. Cheers, Pooja. We'll see you tomorrow. Left my stop to close. Stopped out by 0.3 pips on a retest of the trend line. Raymond, what pair was that you're talking about there? On Euro Cad, huh? Okay, let's take a look at the near term. Here's what it looks like right now. Oh, I see. You got stopped on this retest here on the rally, right? Okay, yeah. I don't blame you. I'm not sure what trigger you used to get into the short to begin with. If you note from yesterday's piece, and whenever I have a chart like this, guys, where you have a clear confluence just above the highs, it's always going to be in your best benefit if you are in a short to put it against that region. Just because these confluence regions are so critical because they highlight not only a level on the horizontal axis, but it also gives you distinction in time. So keep that in mind as far as these confluence regions. Don't worry about it. We'll get plenty more opportunities on this, Raymond. I'm sure of it. I think this thing is just ramping up. So near term, yes, I was looking for a short earlier this morning. I should have checked it before the webinar here. Basically, I was looking for a break of this range. Basically, the lows that you made in Asia last night, the lows that you made in Europe this morning, you got that break. Now you're looking for a move into this key support region, former resistance. Okay, and that is defined by a 236 retracement basic off the highs and a longer term 618 extension. It's at 46.45, 46.37. Okay, want to look to buy pullbacks while above 45.84, basically the median line. Okay, and as we went over yesterday, guys, I think we had a great webinar yesterday. There was a lot of interesting questions on how to use these median lines and some basics on what to expect when we get the inflections. From here, if we break below 46.37, I'd be interested in looking possible short triggers towards 45.84. And if we break the median line, again, keeps the short focus in play towards the lower parallel where we would start to look for more support. I do think that this does go largely higher, but based on the severity or the significance, let's say, of this confluence region of resistance, not surprised to see some kickback here in Euro Cad. Keep in mind for Euro Cad heading towards the end of the week, on Friday you get that double whammy, right? Employment data from not only the US but also Canada at the same time at 8:30. If we take a quick look at what the CAD data is expected to show, here's what the employment figures are supposed to look like. We're looking for a net change of 10,000 jobs for the month of July. Remember, we got a dismal read last month with a contraction of 0.7 thousand jobs for Canada. Unemployment is widely expected to uptick to 6.9% from 6.8. So you can see a scenario where you get those employment figures. If it comes out weaker than 10,000, remember the expectation was much more than, was for an expansion last month, I should say. So if we do miss on CAD data, that might be just the trigger that we need to give this thing to base and start to move higher again on CAD weakness. Any questions on Euro Cad? Raymond specifically, do you have any questions on this at this point? I don't want you to get discouraged off that stop yesterday. I actually ate a stop earlier in the week also on Aussie, right before RBA on Aussie Key. If you guys remember, I actually wrote that in the report. But we'll get more opportunities on Euro Cad, I'm sure. Okay, so that's British Pound and Euro Cad. We're going to touch base on Aussie Dollar, Aussie Kiwi, and then we'll go over into some of the messier plays right now that I'm kind of just scoping out, Dollar Cad and Kiwi. But first is first. Let's go into Aussie Dollar. So keeping in mind that we do have retail sales data on tap later tonight, here's what the Aussie Dollar looks like. And here is what we look like earlier in the week. Oh, you guys saw this yesterday. So as far as the Aussie is concerned, just to go over the daily really quick, Raymond says, no, sir, thank you. That was my fault. Should have moved my stop a little more. And Raymond, I don't want you to get too hard on yourself. I do the same thing all the I try not to, but I end up doing the same thing sometimes. When we're near-term trading, guys, it's a very easy habit to fall into, to get into a position and then quickly pull up your stop. For me, I try to avoid that as much as possible. I'm only pulling in my stop to break even or better once I've taken something off the table. In that way, now that you're reducing your profit potential per trade, you need to cut your loss to break even or better. So just keep that in mind. And the other thing I would recommend, Raymond, is check out the ATR, man. Before you jump into the trade, just check out what the daily average true range is. By the way, quick side note, we are in the process of developing a nice range table for you guys to have on SB Trade Desk, which will highlight not only the average true ranges and the average ranges themselves for each pair, but also going to highlight the moving averages and whether price is above or below. So you'll have a one-stop shop page where you can come to and kind of get an idea for both trend and ranges and volatility. So that's one thing that's in the works right now. Looking forward to it to have on SB Trade Desk soon. But Raymond, you can always just take a look at the average true range, typically we're looking for about a quarter of that per scalp. So as far as your stops are concerned, you got to keep it in line with what the market's doing, right? If we're putting in an average range of 100 pips on a daily average, putting a 15 pip stop, kind of too tight, right? Whereas if we're trading, in a pair that has a much tighter range, obviously, if the stop can't be put against a major high or low, we can't take that trade. For the Aussie, though, back to business. Yesterday was a big old outside reversal day here that took us right against major support, right through the highs. We're now sitting on the high day close still for the month. That's 75, if I'm not mistaken. Yeah. With resistance targets still at 76.44 and 76.87. This is a big region of resistance for me because this formation has been so extremely clear. Caught the highs, caught the lows, median line caught the rally last month, basic trendline support caught the lows this month. Again, there's that median line dead on with a basic 786 retracement from the decline off the yearly high. From a near-term standpoint, here's what it looks like. Okay, again, there was the RBA. Even though they cut interest rates right into key support, structural support, rally. Now on this rally here, we just missed that 100% extension. I still do like a move into that region, and like I said, beyond. So you're now sitting at near-term support, sitting at the monthly and weekly open. We're going to go ahead and raise our bullish invalidation level from 74.90 to 75.50. Okay, if you break below 75.50, you're likely to see this thing drop towards 75.18 or so. And this is where I would kind of give a last-ditch effort to look to see if we find some support. But certainly a break below this level, in my mind, would be a risk of a much steeper decline here for Aussie dollar. Still looking at buy pullbacks, ultimately targeting that 76.87 zone right here. Any questions on Aussie? Mir says, we look to buy at 75.50 for Aussie dollar. Yeah, if we get into that region, and who's this Mir? One thing I want to note, Mir, is I've been getting a lot of questions from you on that. One thing I want to note is this. For our strategy on near-term trading, it's not just levels, right? I want to see something happen at 75.50. I want to see some divergence in momentum. I want to see some a trigger break that gives me sort of the go-to to go ahead and jump into the trade. But I get concerned when people throw that out. So 75.50, it's different from a swing trade strategy, guys, because we're so near term, we do need to pay attention to momentum. I can't just tell you if it hits 75.50 buy. No, because it might drop into this region first on a straight shot. And if you have an order to buy at 75.50, it's going to go right through it. So, a near-term trading strategy, I need to see a drop in 75.50, then some constructive either momentum or near-term price action. The 5-minute chart showing some divergence. You get a long trigger. That might be the play. Does that make sense, Mir? A little bit different from having a swing strategy where we're kind of just eyeing major support for entries. And the reason that we have to be a little bit different is because our stops are not going to be 100 pips away, right? Our stops are going to be rather tight. So I can't just put an order there with a stop below 75.18 on a scalp type of basis. You mean RSI above 40 for momentum? Yes, Mir. So these kinds of developments. I want to see RSI start to hold 40, a trigger break in RSI. So we have resistance triggers that we look for, and momentum. Here was one last night. That actually didn't pan out because the trigger gave out right before the RBA. But look at this, and I had this on the report also. You had some divergence into the low, and even the RBA low gave you some divergence. So even on that low, once the market recovered, you can see that we had some divergence in momentum, and the former resistance trigger that gave out now acted as support. That's your conviction trade right there for a long position. Mir, does that make sense? He says, okay, right on, right on. He says, yes, right on. But To answer your question bluntly, Mir, yes, if we drop into 75.50, I'll certainly be on the lookout for long positions in Aussie dollar. Again, I just like this to the upside. I think it's sort of a sneaker trade here that no one's really paying attention to because everyone's still putting their arms up in the air and saying, oh my God, the RBA is going to cut, yada, yada. What are your thoughts on longs from here in Aussie dollars? No RSI trigger. Let me bring up a 5-minute chart real quick. Eileen, I don't have one open right now. Give me a sec. Again, keep in mind time, Eileen. So heading into like the 9:30 slot, if we hold this range and we get a drop down here with a long trigger, that would be actually a decent scalp to the upside. Remember, the range for Aussie dollar as it stands right now okay, the average true range, a quarter of the average true range for the Aussie right now is only about 21 pips. So that's the only thing that kind of concerns me here. But that being said, yeah, I wouldn't necessarily be looking for a long position from here just yet. A couple things to note, Eileen. She says I don't see any triggers. Yeah, aside from I don't see any triggers, I agree with you on that. The one thing I want to note is I always like just to take a basic look at what price action is doing. And if we take a look, we've been pivoting right along the monthly and weekly opens right here. We rebounded off it, broke below it. Every rally through the monthly open has been slammed lower, and you can see in momentum that since that initial low that we made there, what about a little earlier today into the U.S. trade session around 8 o'clock right here, momentum has been turning ahead of 60 each time. Now, we've been holding 42, but that just suggests to me that we're in a range market near term. In fact, all of the London trade that you see here in green has sort of been a wash, right? Not much going on. So I still think the risk is for a little bit more of a drop before you move higher. One thing I want to sort of take a look at, again, this is going to get messy, just real near term, guys, bear with me. That puts the 100% at 76.65, just lower. Okay, I don't want to stress that at this point, but the fact is I think you risk a little bit more of a drop before you start to rally higher here in Aussie dollar. I see it. Makes sense, says Eileen. Right away. Right on. Right on. In fact, I mean, if we want to get real tight with it or real cute with it, this is actually a short trigger right here, right? Break from over 60 to sub 40 to resistance at 50 puts the downside triggers in focus. Now, the reason I wouldn't use this as an operative downside trigger is because you're just above support. So, I mean, you're not going to scalp a 10 pip scalp here from where you are. So, you know, not something I'll necessarily work with as an operative trigger, but if you do see it break, I'd be looking to take advantage of that drop to offer some fresh long exposure. Make sense? All right, so that is Aussie dollar. Next up on tap is Aussie Kiwi, and this is another one I think has some great potential. I was just talking with this. I was just talking with Jamie about this. Look, I don't remember who it was here in the room. I think it was Mir. You were asking me if our longer-term bias for the Aussie Kiwi is bearish, and you know I kind of responded with an emphatic no. I think actually this has put in a significant low for the year here. Now that's not written in stone. That's just my personal opinion, but we went over this yesterday as far as the slopes are concerned and how this thing has reacted. The reaction that we got yesterday off of a key confluence region here at 104.87, 104.94. Obviously, guys, this thing spiked way lower into the monthly open from last month before jackknifing higher. RBA will do that. Interest rate decisions will do that. Now on the rally here for the Aussie Key, I do think you're coming into some near-term resistance. Namely, that's defined by this 50 line for the current operative structure we've been following. But even on the near term, okay, if you bring this here, you can see a very clean descending median line formation off the highs. The RBA low, okay, perfect tag of the lower parallel. And that puts the risk for a turnover here while below this upper median line parallel. Now, one other thing I do want to just note is it oftentimes will be beneficial to you guys to kind of take some sliding parallels of the operative slope. So if I just take a parallel here, to the high that kind of spiked out, gives you a little bit more of a range to work with. And I'm not going to necessarily want to stress that spike high, but certainly this one here that we made, was on the 25th, gives a little bit more of a padded region. Long story short, you could see another attempt to break to the upside before a move lower, but very similar to what I'm looking at with the Aussie is I think a pullback here will offer some nice long exposure. While we're here, bear with me. Let's just take a look at some near-term developments here on this last high that we made. Okay, I'm actually going to use that 618, get rid of the July opening range high. And now that we've based and made this low, I do want to take a quick look at what the retracement looks like off the high. Ha! Stop traffic. All right. Whew. Pretty clean. Okay, so as you can see, the 236 or the 38.2 came in right in line with that 618, so I'm not going to stress that at this point. But the 50% retracement of the range comes in with an exact equal legs off the low. That's 106 handle into 106.04 essentially. And then more of an important critical topside target on a breakout would be up here, 106.37 to 106.43. That's the high day close that we made. Again, that would be right here. Something's off here. Hold on one sec. This one's off. Sorry about that. There we go. 106.37. Okay, and the 618 retracement, all of that decline comes in at 106.43. So I think the levels are exceptionally clear. Near term, you're at risk for a pullback here. Momentum divergence has been really kind of shaving its face here as we go up to the upside. Series of equal highs, lower high, higher high, higher high, higher high, higher high. So yeah, I do think this is at risk for a near-term pullback. Again, with what's going on in Kiwi, could get a snap higher in Kiwi dollar as well. We'll take a look at that. Would fuel this a little bit lower, but even Aussie on its own face, on its own merits, as we noted, has the potential for some near-term pullback before we rally higher. And topside targets, like I said, are pretty well defined at this point. Any questions on Aussie Kiwi? Here's what it looked like last night. Oh, here's what it looked like actually the night before. Sorry about that. Okay, this was pre-RBA. So you saw that drop right into channel support, take us right through the opening range high, and we're now trading right near the upper parallel. All right, that is Aussie Key. Let's touch base real quick on what's going on with Dollar Cad and Kiwi Dollar. Not really my preferred plays at this point. If you guys remember Dollar Cad, we were ripping this thing up for some time last week. Here's the last update on Dollar Cad. Was right here. Now, we were looking to hold this descending channel formation let me take that back. We identified this descending channel formation last week, noting that key support at 131.21. We've now sailed through that a few times, and that's why on dollar CAD I've kind of strayed away from it a little bit. 31.21 was not only the May high day close, but on the daily chart, basic trendline resistance for that consolidation that we were in, right? So you got the 50 line there for the current operative structure. You have former trendline resistance, which we pivoted against, a 618 extension, that whole region between 3103 and 3120. As you can see here on the left where my cursor is folding, kind of been just sailing through that on the upside, sailing through it again, breaking below it, breaks the conviction of using that as clear pivot in price. That being said, this thing came back, made a 618 retracement of the advance, defended it twice, okay, and we've broken out of this near-term formation. Not only did we break out of it, but in fact, on the last breakout, we came back, tested it as support, and moved higher. That, to me, is bullish price action. So while it hasn't been the cleanest as far as respecting the levels that we've mapped out, I do like dollar CAD higher. I know that kind of throws it in the face of broader dollar weakness, but I mean, that's what the price action is saying. Let's just see what this looks like. Okay. I'm not going to necessarily stress this yet because we don't have too many inflection points with it, but the initial stance looks good. Support, support. On the break, you get a drop. If we add the 50 line, I bet you that's where we just found some support. So this could be a new formation in play. I just wanted to show you this before I deleted this one. I kind of want to keep this clean chart at this point. So cleaning things up now puts the focus on a couple of key ranges. Still, topside resistance is going to be the July high day close, okay, 131.89. And then you also have the 50 line for the current operative slope right there. Key support, at least on the near term, that keeps us still within the confines of this range. We use that Sunday open high, which coincides dead on with the lower parallel. I still like this higher. No, momentum hasn't been all that constructive here, but this drop and defense, again, of the 30 handle of key support here and the monthly and weekly open, for me, it does suggest that, you know, you're coming into a pretty strong area of support. Now, on its face, as we noted yesterday, it's just a weekly and monthly opening range. You haven't made a break of the initial weekly high, and the initial weekly low, when it did break, was a quick snapback recovery. So we're going to continue to eye that range heading into Friday's double whammy employment reports from both the U.S. and Canada. The ultimate topside target, by the way, guys, for the longer term expression here on dollar CAD is still 33.12, 32.95, 33.12. Okay, this is still the major key region I want to see achieved for dollar CAD. Not only forget the swing high here from 324, this is just the initial sort of goal, but you have the 200-day moving average and a 38.2 retracement. Add to that, the median line will converge on that later in the month heading into next week. Okay, so sort of like right here. What's the short-term entry region for dollar CAD, asks Gaurav. Good question, Gaurav. I mean, ideally, you would be looking for a drop into 30.60, the lower parallel here to get long. But since we turned ahead of this, it does risk a little bit more of a deeper pull as far as I'm concerned. 31.20, a break above that in the median line would sort of be the validation for a move higher. From here, there's no play, which is why I was saying earlier in the session, I think this is a messy trade at this point. I'd be looking for either a drop into support for long, for long exposure, or a break through the median line, for a pullback, again, to try to jump into that July high day close. Remember, guys, when we're talking, again, near-term price action and near-term scalping, we really got to cherry pick our entries. Ruth, great to see you in the room. Apologies I joined late. No worries. Did you cover sterling? Yeah, Ruth, we actually went over a deep, in-depth sterling coverage, so I'll have this archived for you as soon as I'm done, and you can review that at your leisure. Let me know if you have any specific questions right now I can help you with, though. Gaurav, does that make sense as far as the dollar CAD? He says, yes, thanks. You're more than welcome. And again, you see the raised ceiling here, turning ahead of the median line. At the 50, that would be your first target to the upside, and it coincides with the July high day close. You know what? Let me see what this looks like on the 5-minute. Okay, so that was an entry right there, actually. Into the 50 line, which we just added, so we didn't have that yet. But look at the momentum on the 5-minute. Look at the momentum on the 1-minute. These are your ideal entries, guys. Ideal entries. So, you know, I'm not sure who it was who asked earlier in the session if that was Mir or Gaurav, but this is what I'd be looking at. Oops. Basic trendline trigger and momentum. Divergence, price action making a lower low. The oscillator making a slightly higher low. On the 1-minute, you have even more rampant divergence. Lower low, lower low, lower low, higher lows. Starting to turn ahead of 40, and here's the 60 break. So you probably can see this travel right back into the median line before it starts to turn over. Long story short, I want to stay constructive. Dollar CAD above 30.60 if possible. What time will the archive be available? Ruth, it takes about 45 minutes to process the video and then another 15 to get it uploaded. Here's what it is real quick. I'll show it to you. Nothing's really changed on the sterling from last night. Ruth, and our basic premise this morning that we were discussing is likely to see some more pullback here before we start to move higher. Major key resistance is going to be right at this region here. Basic trend line off the high, but you also have the operative slope of the ascending channel converging there as well. So I'd be looking for a pullback, bullish invalidation, or we'll stay constructive rather, above 32, the weekly open, 32.35. Broader bullish invalidations down here. So as long as we stay above this region, broadly speaking, we'll continue to favor the long side on sterling. It's a quick recap for you, Ruth, but I'll have it up for you as soon as I can after we're done, all right? Any questions on dollar CAD, Aussie Kiwi? All right. Last but not least, I do want to just touch base on Kiwi dollar. Like I said at the beginning, I kind of think it's getting messy here. I like it lower, but we haven't really gotten that much conviction turn in price just yet. It looks like it's happening right now. Look, in my notes, all I have is watch the opening range, and that's what I'm focused on. And a break below the weekly low here coincides very well with former resistance that we broke above late last week. A basic look at some trend lines as well. So here's the broader structure we've been following. Just some basic channeling or median lines or parallels rather, excuse me, off the lows here. Puts in focus this region. Okay, this is just a basic trendline resistance here, sliding parallel from that low. You can see it broadly held. You got nice pivots here on near term. I want to see resistance near here. Okay, on a swing to the upside. Here's your monthly and weekly open. So for me, actually, I'd be interested in taking a short off that region, looking for a move into basic trendline support off the lows. Also, really near term, if that does give us that swing to the upside and a break, could constitute a near-term head and shoulders pattern, which would give you a measured move somewhere back into 70.70. So that's sort of what I'm thinking here on Kiwi dollar. Also note that you've been marking some divergence into the highs, price action making a higher high, oscillator making a lower high. So it looks vulnerable to me. Although it did break the upper channel, it hasn't been able to make much progress. So for me, I am looking to sell rallies near the weekly and monthly opens, near this trend line here is resistance, looking for initially a tag of basic trend line support, and a break lower would put us right back on course. Remember, yesterday or last week when we highlighted this setup, we were looking for the rally to offer a move back into 71.80 where we were looking for short exposure. I think I have it. Here it is. This is from last week on the 28th, right? So we were looking for this rally to give us that 71.80 as an opportunity to get short, right? We're in this descending median line formation, looked pretty good. Well, Friday's dollar sell-off charged a rally right through. We opened the week offering some support there, slow and quick dribble lower, tried to make a new high, failed on divergence, and here we are again below the weekly and monthly open. So I do think Kiwi looks lower, guys. And if we do break the weekly low, that's when you're going to want to tack on a quick and basic retracement. Okay, such a scenario where you get a break of the weekly opening range low puts your targets initially right here. 38.2 comes in at 71.40, and then a 50 comes in at 71, followed by the 618, a little bit more of a key support down at 70.67. Any questions on Kiwi dollar? Remember, RBNZ is on tap next week. Quick question on your 5 and 1 minute chart. Sure. Your RSI at the bottom says RSI 2, and the only one I have just says RSI. Is there a different indicator? Steven, what you're looking at here is an add-on indicator called RSI 2. You can find it on fxcodebase.com. And the only difference, there's a link for you, by the way. The only difference, Steven, is that it adds the 60 and 40 levels for you, so I don't have to draw them on like I do here in TradingView, and also auto scales the oscillator for you. So as you're scrolling in and out, you know, it'll auto scale it for you. Same thing, the equation's the same, the calculation and price action is the same. It's just the aesthetics, and adding the 60 and 40 for me is sort of a big help. So Steven, hope that helps. Joel, what do you mean by that? He says, thanks, mate. Got to go until next time. I wish I could make more of these. Oh, make more of them, and you mean attend to more of them. Joel, I'd love to see you in more of them, my man. Best of luck trading. I will see you tomorrow. Steven says, great, thank you, more than welcome. Mir says, just a quick question about the pound. Sure can. Here's the pound man. He says, would you look to short it when price hits the top of the triangle formation? When triangles end, the previous trend resumes, which is down. So Mir, my man, let me ask you a question. Why? Well, first of all, you're right. Oftentimes, not always, oftentimes, triangle patterns are continuation patterns. You're right. But Mir, there are often times when triangle patterns are terminal. Okay, that's one thing I want to note to you. Second thing I want to note is we've come off a pretty major support structure, and we went over this on the weekly charts, right? Major support structure where we rebounded off of post-Brexit. So I guess my question to you is, why are you looking for a broader short story? Because if you're looking on that just based on the premises of Brexit, I'm not with you. Remember, we're always going to stress price action here. We're not going to give too much credence to the stories and the headlines. We give credence to what's happening in price. That's what we're trading. That's what we're profiting off of, and that's what our focus will be on. That being said, Mir, from a scalping standpoint, near-term intraday trading standpoint, yes. As we get near the upper channel resistance here, I'll be looking for a turnover in momentum. I'll be looking for possible short triggers just for a short scalp. But would I be looking for continuation to a new low? Not necessarily yet. It's very important to note, I'm not saying it's not going to happen. It could break down and jump all the way back into that trend line from 1985. I don't know. But all I do know is in the near term, On the intraday, you're at risk for a little bit more of a pullback. If we do get a rally into here, yes, I'd be interested in some short exposure, but I'd only be looking to short into targets within the confines of this formation. It's a different mentality, Mir. To answer your question bluntly, if sterling were to break triangle formation, then I'd be looking for a rally to sell. But as it pertains to our intraday approach, I'm not going to be looking to take a position inside of a formation and target something outside of the formation. Why? Because I'm working with a very tight range. I'm intraday scalping, typically much more heavier leverage. So look, if I take a short here and I kind of phase out, take a little bit off the table, bring my stops down, take a little off the table, bring my stops down, maybe I'll still be in it when it breaks. But the point being is that our premise is to trade the levels as seen here. You know what I mean? I'm just, I'm not of the mindset that sterling is just going to continually drop just because everyone's scared of Brexit. That could be a year out before Article 50 is invoked. So what does that mean? You think this thing is going to go to parity first? It could, but that's certainly not what the technicals are suggesting just right now. Okay. Mir, I hope that helps, man. I hope that helps. From an intraday approach, I definitely would be looking for exhaustion up there, but would I be looking for, a move past 120.950? Probably not. At least not initially. Question here from Steven says, do you have time to look at Euro Yen now that it's heading back towards 113? Sure, man. Here's Euro Yen. I highlighted this setup somewhere. I'm not sure if it was on Daily FX or FXCM, but here's what we're looking at with Euro Yen. It's completed now an exact 100% extension off the highs. That's 113.13, excuse me. And I'm still looking lower. Well, let me take a step back. I'm looking for exhaustion. It's in a downtrend. I'm looking for a possible drop into like this region to get some longs in play. My only concern with this trade is the yen. It's the yen. Pete wants to take a look at Euro Dollar as well. So Stephen, I'm going to come right back to this, but I want to show you Euro Dollar, kind of put things in perspective. Here's what Euro Dollar looks like. Again, I did highlight this chart yesterday on Daily FX. We came into a major Fibonacci confluence, my favorite of Fibonacci confluences. For those of you who've been with me for a while know, a 618 extension off the low, or excuse me, 100% extension off the lows, a 618 retracement off the highs, 9 times out of 10, these will give you great inflections. If it's going to break, you're likely to see a rocket higher. And if it doesn't, you're likely to see a more stern pullback, which is what we're getting. So for the Euro Dollar, I'm looking for support right around these regions. This is your weekly opening range low. These are some basic sliding parallels of the current operative slope that we're working with. And here's your weekly and monthly opens. So, not what I meant to do. So, not what I meant to do. This whole region here is basically near-term support. Monthly, weekly open, and the weekly opening range low. So if Euro is still going to push higher, this is where you'd expect to see some near-term support. If that breaks, look at the daily, you still risk a drop all the way back to sort of that 111.64 region. Basically, if this breaks, you risk a drop into channel support. Last month's monthly open, it's like 111 handle basically. But I like the Euro higher. I think inevitably you do stretch into that major confluence here at like 112. But from here, you do risk a little bit more of a setback just based on exhaustion and momentum, price action making higher highs, slightly lower highs. Now, again, it's important to note that these momentum triggers above 70 are your weakest. Remember, when both reference points, the closer they are to 50, actually, the more beneficial and stronger they are. But nonetheless, it is clearly visible with a clearly lower high and a much steeper high. in price. So yeah, near term, it does risk a move lower. Ultimately, I would be looking to buy that. If it breaks the opening range low, remember, objective, right? I don't care. It's an objective opinion. If the market breaks the opening range to the downside, shifts the focus for the near term lower. All right, Pete, hope that helps. Says thanks with an exclamation point right on. Stephen, to get back to the euro yen, kind of puts things in perspective, right? My problem is with the yen. And here's euro yen at this point, sitting at support. We talked about the euro dollar possibly finding a move lower, which is why for me, this thing drops into 112. I'd be looking for some possible turns in momentum there, especially if we get a divergent low here in momentum as price makes this new low. Might be a great entry to try to fade the weakness. If we take a segue to dollar yen on the daily chart, okay, she's ugly, but she's there. Low day close, or the close low, excuse me. The close low for the year comes in at 157. Near-term resistance is going to be the low day close. And that's 102.19. That's the region we need to clear to get back on the bullish side for dollar yen. So you could see a scenario where even this drops and tags that support before moving higher. I don't know. I'm not trading dollar yen. I have no interest in even touching this with a 10-foot pole at this point. Not yet. Not yet. So that's my only problem with euro yen. Could you look at dollar Swiss, Horace? I could take a quick look. I am over on time, guys, so I do need to run. Don't forget, Jamie will be on at 1 p.m. with his midweek strategy webinar to go over some of the swing trades we've been following. But a quick look at dollar Swiss. Man, I was looking at this earlier in the week, and I was wondering if we were actually going to get some play off that 50. It seems like we are getting it. And today here, Horace, it looks like we're making a break of the weekly opening range. So I do expect that you'd see some upside here. Remember, upside on dollar Swiss is essentially going to translate to further downside on euro dollar. Here's what it looks like on the 30-minute. And again, now that we're making a break of the weekly opening range, if this does validate, we're in overbought condition. That's as bullish as it gets. Again, you're at risk for a pullback, but if we close above these levels for the weekly opening range, first thing you want to do is take a basic retracement off the highs. No, that's the low. It brings it 236, basically where we are right now. And might be too extreme here, but let's just see what this looks like. Not bad. Not bad at all. There you go. Near-term resistance. So yeah, you can get some kickback. The monthly open comes in here at 96.87. Might be a nice area of which, might be a nice area of which to start looking for some support if this is in fact going to move higher. Subsequent targets would be up here and up here. Bullish inval down here. It's actually a decent setup. Horace, thanks for bringing it up. Not really an aggressive dollar Swiss trader, but when the setup is clear, it's clear. So feel free to take a snapshot of that screen if you need for future reference. And we will follow this and see if we can find some support near term at that region to get the next leg higher here in dollar Swiss. Might be a little premature. I would expect to see a pullback before we move higher, and that's just based on the fact that the dollar still might be, have another high to make here or test this resistance and then to stretch in that key support that we're looking at in the daily chart. Still a possibility. So just keep that in mind as far as base dollar movements is concerned. All right, guys, we'll wrap it up here. Again, quick reminder, 1 o'clock p.m. Eastern for Jamie's midweek strategy webinar. We'll pick things up tomorrow morning here at 8:30 Eastern for another intraday strategy webinar. We'll give a quick preview on all the dollar crosses heading into Friday's highly anticipated non-farm payroll report. Best of luck trading, guys. We'll see you tomorrow. Cheers.